Hey guys, Ken Calcutt here, Cornerstone Financial Management. Just giving you a first quarter update for 2024. What you'll see here on the screen, we're looking at three different indices. The green is the S&P 500, year-to-date up 10%. The Dow Jones is the orange line, it's up 5%. And then the blue line here, this is the bond index, that's actually -1 for the year. So we're seeing varying returns so far this year. It's not to be unexpected. What we're watching for and what's causing the difference in returns here is still interest rates. Interest rates are a big deal. They're holding steady. We had a big rally in the fourth quarter of last year, and a lot of the S&P rally here was based on the assumption that rates were going to get cut this year and cut substantially by the Fed. That's looking less and less likely, which is why the bond market is struggling, because if interest rates are not going to go down, bonds are not going to go up as quickly. So what we're seeing here as the economy is holding up, we're not quite down to our 2% inflation goal for the Fed. There's really no reason for them to cut interest rates yet. And if they're not going to cut interest rates yet, maybe the market shouldn't be running quite this fast. So we might see things slow down a little bit as the realization plays out that rates aren't going to get cut as much as we originally thought 6 months ago. But that's fine. That means the economy is healthy, and we're learning to operate back in a normal interest rate environment where interest rates are 5% instead of 1 or 0. So it's not a bad thing. It's just the market is adjusting to the reality of what the Fed's going to do with interest rates. We also have an election year this year. That always causes some volatility. But the good news is volatility is often based on the unknowns of the market. Stock market does not like unknown variables. Well, the good news here is both of these candidates running for president, regardless of who wins, neither of them are an unknown. They've both been president for 4 years. We know exactly what we're getting, regardless of who wins. That eliminates a lot of the volatility in the market this year, which is good. So we would hope that the market would stay a little more stable than normal in an election year. But we're watching all of this closely, and we'll make adjustments as needed. But if you have any questions for us, as always, reach out anytime. Thank you.